Well, Jay Jacobs, U.S. head of Thematic and active ETFs at BlackRock, joins me now in studio with more and to talk about some of the major storylines as we head into the new year. Jay, welcome.
Thank you for having me.
Look, I think NVIDIA is top of mind for many of our viewers and investors these days, specifically because it is the purest play in the market on artificial intelligence. How is that shaping your ETF role at BlackRock?
Well, I think what investors need to recognize is, yes, there's some Mag 7 mega cap tech stocks that really drive the AI story today. But if you look out 3, 5, 10 years, there's going to be a broadening of artificial intelligence that really lifts up dozens of stocks, not just in the United States as tech stocks, but even globally and across other sectors. So bringing out a fund like BAI, which is an actively managed AI ETF, allows our portfolio managers to really anticipate what will be the next major leaders in artificial intelligence going forward.
And what are those leaders expected to be?
Well, it's going to be across the entire tech stack of artificial intelligence. So if you look today, a lot of the early winners are semiconductor companies as well as model developers. These companies are building these large language models. Going forward, it could be other semiconductor companies that are playing different roles within the AI ecosystem. It could be companies developing data centers. It could be companies building very niche models that are not designed for everyone to use, but maybe very specific use cases. And I think what will be the most interesting is what are the companies that build products using artificial intelligence going forward. If we think about what happened with the rise of the mobile internet, you had all these new companies in social media and e-commerce that really were born because people had fast cell phones in their pocket. We think there's going to be a similar revolution in AI where entire industries are built using artificial intelligence as their underlying technology.
How does that allow investors to really look beyond the Mag 7, which has driven so much of the market gains that we've seen since this bull market started 2 years ago?
Well, that's exactly the point, right? The Mag 7 has gotten so much of the attention and has driven so much of the returns, but really some of the best opportunities going forward are going to be beyond that Mag 7. So it's really about investors, whether it's through our BAI actively managed ETF or looking at other plays around the world, trying to anticipate who wins in the next few years. And it's not just going to be the Mag 7. This is a economy-changing trend. We call it a megaforce, and therefore we think dozens of companies are going to be impacted by this.
Are there certain assets that you think people should be shedding to gain exposure to artificial intelligence?
Yeah, so what we see a lot of investors doing is kind of cutting back in two ways. One is cutting back just on their core exposures because so much of the broad market indexes are in the Mag 7 today. About 30% of your core equity, US equity holdings are in the Mag 7. You can sell that down a little bit and replace it with an artificial intelligence ETF that's going to extend beyond the Mag 7. The other way people are looking at it is if you have a tech sector allocation, reducing your tech exposure and increasing your artificial intelligence. Because there's a lot of tech within AI, you get to replace your kind of sector risk, but you get to have more exposure to a high growth theme by replacing tech with AI.
Talk to me more about active management versus some of the indexing management that we've seen.
I would say the first kind of generation, the first era of ETFs really was based on index investing, getting broad exposure in low-cost wrapper to big swaths of the market, S&P 500, et cetera. Now what you're seeing is that actively managed, active portfolio managers are bringing their strategies into ETFs. This means that through the tradability and accessibility of an ETF, you can get access to world's leading portfolio managers, which previously were harder for investors to get exposure to. So this is really about democratizing access to actively managed portfolio management.
And as people look at their own investments as we head into the new year, what has worked, what maybe they want to reposition, and goals for 2025, what would you recommend to them?
Well, I think there's three kind of overarching themes people should keep an eye on. One is absolutely artificial intelligence. We are full steam ahead in the build out of AI in 2025. There's going to be hundreds of billions of dollars being spent to build out this megaforce. But people should also be looking at two things. One is, how is the physical economy in the US being reshaped? This is about investment in infrastructure, investment in manufacturing, investment in home building, because there's just a lot needs to be built in the US. And the third thing people should be looking at is, as we enter a rate cutting environment, how does that impact things that were, frankly hurt in the rising rate environment in 2022 that now could have a tailwind? That's things like biotech stocks that benefit from low interest rates. It's also things like Bitcoin that might benefit from low interest rates as well.
Interesting, Jay. Top questions that you're finding your clients might have in this environment, what are they?
They're trying to figure out how to kind of repeat the returns they've seen over the last decade, which largely they got from investing in broad US equities, now there's a view that you have to get more granular. You have to look at kind of more niche parts of the market to access the returns that we need to achieve our financial goals.
Jay Jacobs, great to have you on the show. Great to see you in person. Of course, here as BlackRock celebrates the opening bell, and we're off to the races in the trading day. And Jay is the U.S. head of Thematic and active ETFs at BlackRock.